Well, will the SpaceX stock end up in your 401k? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. Well, if you got a question for me, I've got an answer for you. Just go to the website at www.prudentmoney.com. Send a question through the link at the top of the page, and we'll get you taken care of. That's off the website, www.prudentmoney.com. So yesterday we talked a little bit about stock bubbles and investment bubbles and how they work. And the question that I think is very important for any investor to be able to answer is, what do they feel about, is this current environment that we're in right now, is it an AI, artificial intelligence bubble, or is it not a bubble and it has way more to go? And it's a very important question just because how you answer it determines how you think, your opinions, most importantly, the actions that you take. And that's where we get into the risk aspect of this question, is that if you are correct and the AI market and stock market is in a bubble, then that means that would suggest that down the road, as soon as tomorrow could be 2 years, whenever, but at some point we're going to see massive losses in the stock market, because that's what investment bubbles do. They explode. I mean, I used the example yesterday of blowing up a balloon, and you keep blowing that balloon up to the place where it can't take any more air, but you keep pushing it beyond its boundaries, and then the balloon pops. And it represents the same thing that happens to a bubble being the balloon, and you keep pumping more money and more money and more money, and at some point it bursts, and all of the beliefs that this market is going to go up higher and higher and higher, everything comes crashing down, and investors lose a lot of money. So we talked about that yesterday. I think it's a good, if you didn't listen to the program, I think it's a good one to go back and check out and determine and see how you feel about it. Because once again, I do think that it's very important to understand how you feel about the answer to that question. Are we in an AI bubble? Because if you feel like we are, then that means only one thing, that you need to assess your risk level. I didn't say change it, didn't say to do anything to it, just to assess it and make sure that you're comfortable with that risk level. That's what's very important. You know, it's interesting. You can look at this particular situation with the market and the idea of an AI bubble, and you can come to the conclusion that, oh, definitely, it's got all the markings, the overvaluation, and all these different metrics that you can look at, comparing it to the past investment bubbles, and come up with that conclusion. At the same time, things change, and it could get much bigger and larger, and people could make more and more and more and more money, bigger gains, bigger losses. And here's the other thing that's interesting too, is that you get to a spot in an AI bubble, and let me say this too, is that the whole thought is that an AI bubble would bring the stock market down, of course, because they're so entwined together, is that the stocks that we're looking at today for AI may not be the same stocks after a bubble is burst. And what the good thing about a stock market bubble, if there is such a good thing, The good thing about a stock market bubble, the good thing about a bear market, once again, if there's such a thing, is that they cleanse out the toxicity, they cleanse out the companies that aren't profitable, and only the survivors and the strong companies stay and add to AI going into the future. It doesn't mean that AI goes away. It doesn't mean that AI drastically change. I mean, I guess it could, but it gets out all the stocks, all the players who shouldn't be there. And so that's what you want. You want to keep in mind is that not if you say I don't, yeah, it's a bubble, but I don't care. I'm going to be an investor for the long term. I was talking to a friend of mine yesterday, and he was saying the exact same thing. He said, I'm a long-term investor. If it isn't a bubble, it does get much higher and it does burst and I lose a lot of money, I know that long-term, this is going to be a great investment for me. Well, long-term, AI, I think, will be a great investment. It's just that, will the same players that you're seeing today be the same players that you see in the future? So keep that in mind. Now, pop culture finance, very interestingly enough, as you would imagine, has a different take on this whole thing of a stock market bubble, a stock market going to brand new highs, and that type of thing. And this article that came out today says, "Don't fear new highs. What history says comes next," which would suggest don't get spooked. And I'm not telling you to get spooked, and I'm not telling you to sell your investments. I'm telling you to be comfortable with your risk that you're taking. That's the whole point. But they're talking about, obviously, selling at an all-time high is not a good idea. It's actually a bad move because highs beget more highs, and you make more and more money as the stock market goes higher. And it gives some statistics and that kind of thing about supporting why they believe the way that they do. And, it's one of the things about, and we talk about this quite a bit, is that you can have an opinion, and that's all that it is. It's an opinion. I'm not here to tell you I'm right and they're wrong or anything like that. I'm here to tell you this is what I believe, and this is why I believe the way that I do. So keep this in mind as you think about it. Although that is true, I mean, you see highs gain more momentum, and you see them turn into new highs and new highs. We've seen it so far with the stock market in present time, and of course that's goes along with being in a bubble. Most of the time is that the new highs continue on for a lot longer than you think that they will. But at the same time, new highs also stop at some point, and there's nothing to say that they won't stop sooner than anybody can imagine. And you can look at the average and go, well, most stock markets that are in a bubble go to 25 different new highs before they crash. Well, it could be different this time. I hate to say that just because it seems like it's never different. And it's not. Don't get so set on that the market should go to new highs. The problem with that comes with the buy the dip mentality. So every time the market comes down, it's about buying more shares at lower prices. And although that is an investment strategy, it also, buy the dip, does, it works for a long time, but at some point it doesn't work, and the market starts going down, and it continues to go down. It catches momentum, and investors lose a lot of money. So just keep that in mind as you think about that. But one of the things that we didn't talk about this yesterday, I said we would cover it today. One of the things that you see in bubble environments is a lot of kind of shady business practices. This, and I'm not by any stretch suggesting that NVIDIA, which is the biggest AI company, I would say pretty safely, that they are engaging in fraud or anything like that. This was just the subject of an article about what's called circle accounting, or round tripping, or circular financing, and it's a way of making revenues of a company look greater than they actually are. and had a real good example concerning this. It says, NVIDIA invests, as an example, $100 million in Company A, and Company A probably being an AI company, because that's what NVIDIA is doing, and they're buying and investing tremendous amounts of money. NVIDIA reports chip sales revenue. Company A uses much of that money that they got from NVIDIA to buy NVIDIA chips. Once again, NVIDIA reports chip sales revenue. The question becomes how much of the demand for NVIDIA chips, which translates into sales revenue, is truly independent versus being supported by NVIDIA's action of giving money and investing money to companies that buy their chips. And this is called circular financing. Actually, a client brought this up to me. I thought this was very, very fascinating because I had not heard of it before. They also mentioned in this particular paper about Enron, the Enron style of cooking the books or having fraudulent accounting, making a stock look like it's more valuable than it is, or a company is more valuable than it is. Incidentally, that all took place during the internet and tech bubble, just as a sideline. So NVIDIA, and I want to stress this, has strongly denied that it is engaging in improper accounting or fraud. The company has stated that it does not use Enron-style special purpose entities, like we gave in that example. It does not rely on vendor financing in the manner critics allege. Its investments in related party transactions are disclosed. It's important, the article goes on to say, to distinguish between illegal accounting fraud and aggressive but legal business arrangements. More on that in a second, because I think you add a little bit more to it to bring some clarity to that. We are up against a break. This is Bob Brooks. Stick around. I'll be right back. Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern-day steward movement.
Dynamic, practical, life-changing.
There's no point in going to church and not letting the Christ who gave birth to the church on the day of Pentecost change your life.
Join us each day as Pastor Paul Shepherd applies the timeless truth of Scripture to everyday life. It's Destined for Victory on this great station.
Weekday afternoons at 3:30 here on Bible School Radio, KDKR.
This is Rob Randall, your host and teacher of the Invisible War radio program. The Invisible War is the study of God's Word on how to walk in Christ's victory in the spiritual battles we face against the powers of darkness. Join me every Sunday morning at 9 right here on KDKR and KYJC in Commerce, your station for life.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. If you do have a question for me, please go to the website at www.prudentmoney.com, and you'll find a link at the top of the page. Go click through that link if you have a question about what we're talking about today, risks that you might be taking. Are you taking too much risk? Shoot me an email. Let's talk a little bit about it. You can get that. We'll always do return those emails. In fact, I have a little bit behind, and so we'll be returning the rest of who I have not responded to today after I get done here, actually. And but be sure and take advantage of that. That is there and is used as a resource by a lot of people. We'd love to hear from you. That's at prudentmoney.com. It's this article, and I read this before. It's important to distinguish between illegal accounting fraud, fictitious sales, hidden liabilities, fake revenue, or aggressive but legal business arrangements that may still concern investors. I don't think that aggressive, yes, it's legal, but it is, where does the word unethical come into, or shady? And why would you want to do business with a company that's doing that, that's taking advantage of that type of situation? Could you go to jail for it? Well, actually, yeah, and a lot of people with Enron did go to jail. There's a big difference between illegal accounting fraud and breaking the law. But I don't think that aggressive but legal business arrangements, unethical behavior, is too far off of that illegal accounting fraud. Yes, they're two different things, but keep that in mind. And you got to ask yourself the question, and is a company worthy of my trust that would do such, that would conduct business in the way that they're doing? So if you're looking at NVIDIA as an investment, the key question is often not, is the revenue real, but rather how much of today's AI demand is sustainable without continued financing and investment throughout the AI ecosystem. And this has been my concern all along, is that AI, the technology is real. It is go-to, it is ready to use. But there's a big gap between the people who are ready to use it, I believe, and the capacity that they have. There's a big gap between these data centers and the capacity that they need. There's a lot of questions. So that's where I do believe something like a burst of an investment bubble or a bear market can be a good thing from the standpoint of clearing out the toxicity and kind of redefining what AI really means and maybe doing things a little bit different. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. SpaceX, which is Elon Musk's company, and about to go public, which means it's going to be a publicly traded stock, which you could buy shares into it if you so chose to do so, is going public on June the 12th, and they suggest that the valuation, what the company's worth, is nearly $1.8 trillion. Wow. That's going to be, and that's worth $1.8 trillion based on a company that has never made a profit. Let that sink in for a second. So you're betting on the future. One of the things on Shark Tank, if you ever watch that show, it's where you have 6 entrepreneurs, Mark Cuban being one of them, and they all listen to people pitch ideas, and they decide whether they want to invest into their idea. So someone will come up and talk about their idea, say it's selling a new technology, and that technology is worth $10 million. And Mark Cuban or whoever's on the Shark Tank panel will say, where'd you get $10 million? Well, let's talk about what it's going to do in the future. What they want to know is what's it worth right now. And there's a lot of discussion about that. And if they price an IPO, an initial public offering, to go public on the stock exchange, if they price it with a valuation of $1.8 trillion, you're for sure going to overpay for it. And so it'll settle in around whatever the real valuation is of that particular IPO. Morningstar says it's worth about $780 billion. Well, that's about half of what Elon Musk feels like it's worth. So if you're investing in a 401k plan for retirement using index funds, now when I say an index fund, that means a fund that replicates the return of an index that it's mimicking. So let's say that I want to do exactly what the stock market's doing, then I'm going to be pretty safe in investing into an S&P 500 index fund, which is set up just like the stock market S&P 500 index, and it will mimic the returns and the losses. At least that's what it's supposed to do. Will it do it every time? Nothing's guaranteed, but that's what it's set up to do. That's what it has done. And just throw that disclaimer in there. Well, a small part of the rocket and satellite company that's going, SpaceX, that's going public, is likely to wind up in your 401k account if you're investing in index funds, even without you buying a single share. Now, should that be something that's discouraging? Well, maybe so, and I think it's got a lot of interesting parts to it. But here's why this may actually happen. Now, keep in mind, when I say the S&P 500, the S&P 500 is made up of stocks of companies, and you invest in all those stocks of all those companies when you invest into the S&P 500. I mean, it's a diversified way of investing into a particular index. So there are rules that protect what we would call a passive investor, somebody putting money into the S&P 500, by keeping unprofitable firms with no track record out of the index funds where millions of Americans invest their retirement savings. And this has been eased, interestingly enough, for the SpaceX IPO. And we could go down a lot of rabbit holes because of just that in itself, but we will not do that. It opens the door for index fund providers like a Vanguard, or Fidelity as far as that goes, for index fund providers to waive the profitability requirement and allow SpaceX to begin trading on one index in as little as 5 days. Now, like I said, this has got a lot of moving parts. And number one, let's talk about the main moving part, which is not addressed in any of this. If you add to the S&P 500, to an S&P 500 index fund, an investment, even though it may be very, very small, if you add the SpaceX, something as high risk as SpaceX, and you're allowing them to be who is a company that has no profitability requirements. They don't meet the profitability requirements, or the number of months they have to be in business. In other words, they're just a hot flying stock, or potentially a hot flying stock. If you add them to that index, it definitely raises to some degree the risk level directly and indirectly. And the question is that a violation of the fiduciary responsibilities of the people who manage the 401k plan? Because unless they go out of their way to make sure that everybody that is investing in that index fund inside their 401k, inside their company, is getting notified that SpaceX is now a part of that S&P 500. For a lot of people, they'll go be excited about it. For some, though, they may go, I don't know that I feel so comfortable with that, if they're really watching. And if someone loses a lot of money and they can point to that particular investment being why they lost money, which is a little bit of a stretch, but in these days and times, not really, then the fiduciaries, the individuals who are being charged with fiduciary responsibility over that 401k plan, could be held under liability for doing that. So keep in mind. In fact, we're going to go over this tomorrow and talk about 401k plans and some of the other things that you want to be aware of that are coming down the road. Because and I've talked about this before, but I want to continue to talk about it because I think that listeners, I think you need to understand what's being allowed and what's happening. But this has got a lot of particular issues with it. So that's definitely a story that's getting not as much media attention as I would like to see. But here's the good thing: is the S&P 500 has come out and said we will not do this practice. We will not waive our what we think are responsible requirements, and we will not allow SpaceX to be a part of the SP 500 index investment. I think that's good for them. Good for them. However, NASDAQ 100 and Russell 1000 are going to be allowing that their flagship indexes to allow these mega stocks like mega IPOs, like SpaceX, within the first few days of trading. So there you have it. Good for you, S&P 500. I don't think it's a good idea. And we'll talk a little bit more about why I don't think it's a good idea tomorrow. If you got a question for me, go to the website at www.prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.